All right. Welcome everyone to the Tuesday live stream for the week. Hopefully everyone has been doing great today and this very, very busy week. Hey, what's up, man? What's up? 2 likes. Awesome. Try to get to 10 likes tonight, guys. 10 likes. PG. Yep, he's back. Okay. So, if you guys have read the description box below, this is what we're going to be talking about tonight. Okay. So, hey, hello. So, first of all, okay, we have FOMC, all right, and we know for sure, okay, the market has already been pricing in, all right, okay, the market has already been pricing in that the Federal Reserve is going to hike again. They're going to start to hike again because remember, they paused rates in between meetings, right, from last month, and now, in this month, they're going to increase again by 25 basis points. And the federal funds futures market has been pricing in that already, or they're expecting that. So I'm pretty sure we're going to get that tomorrow. Now, the question now is what Jerome Powell is going to say tomorrow. Are we going to continue, okay, in September to increase interest rates for the last time, okay? Or do we pause again? And then maybe we might even increase rates on December's meeting, the last month of this year, right? Because again, the markets are expecting 2 more interest rate hikes, right? They're both going to be 25 basis points, okay? Or a quarter of a percentage point. So you guys have to remember that, right? We have 2 more quarter of a percentage of interest rates that they're going to hike, okay? And so tomorrow, we're going to get 1 out of 2 of those. And so what you guys need to be looking at tomorrow, during Jerome Powell's conference, we have to see whether or not he has a very hawkish tone with his words and his, just his emotions, I guess, and try to gauge what he's trying to say, right? Because it's going to determine whether or not the Federal Reserve is looking to continue to hike interest rates for the last time in next meeting, right? In the next meeting, which is going to be held on September. So that's going to be a key factor into how the market is going to react tomorrow. And in my opinion, the market most likely will move to the downside, especially if we have a little bit of a hawkish undertone in Jerome Powell's statement, his opening statement during the press conference. So again, remember all of that, please. Make sure you guys remember that for tomorrow, okay? And tread carefully. Now, oops, let's actually look at SPY first. So SPY hit a very critical level here again today at 456.50. But there's something that you guys should know. The market internals or breadth weren't particularly strong, and usually when we can't get a divergence like that, when the overall markets decide to push up higher while the market internals are showing a little bit of weakness, that tends to be a little bit of a red flag, right? Or maybe a yellow or an orange flag, right? So it's a warning. It's a warning. And so, when market internals showing weakness while the overall market starts to move up, right, that divergence causes a little bit of warning signs to pop off. And so tomorrow, if Jerome Powell is hawkish during his opening statement, the market bears will come in pretty hard, all right? And so make sure you guys understand that. Now, let's take a look at what's actually going on right now. So SPY futures, okay, is showing a little bit of a top-ish price action, okay? And we have a gap fill that we haven't filled in just yet. And if you guys remember, the overall markets or SPY, we always fill in gaps, whether it be gap ups or gap downs. All right, I said that multiple times now, so you guys should understand. So with all of that in mind, okay, there's still ways to go long. You don't have to go short. So I've been telling all of my members this. All right, if you guys are watching the recording or the live stream, right? Live. And if you guys aren't members, private members of the newsletter and the Discord, okay, I've been telling my members since last month, or maybe even further than that actually, that we need to be preparing for the summer season, the summer seasonality, okay? And so what I told them that at that time was that we need to start looking at these lagging defensive sectors, because again, they were lagging at that time. All right, for example, let me show you an example here. XLI, all right, this is the first sector that we looked at when we were trying to prepare for the incoming summer season. And we were looking at this since, I think, mid to late May. All right, and XLI, the industrial sector here, has gone up since then, okay, nearly 12%. All right, this is a big move. All right, I believe we reached all-time highs as well. So, lagging sectors such as XLI, right, these are defensive sectors that have been lagging. Because again, what specific sector has been leading? Tech or growth stocks, right? Tech sector, right? The Qs, QQQ. This is what has been leading the entire market to the upside, right? And so if we see a pullback in this leading sector, that means money is going to flow out from these leading sectors and it's going to start flowing back into the lagging sectors, such as the industrial sector, right? Or the energy sector, or the real estate sector, or the healthcare sector, or the financial sector, right? Or even, I guess this one's not really leading just yet since it's having a little bit of trouble, but going into summer, it was doing pretty well. But biotech, right? So with all of this in mind, right, you need to think about how you need to move forward from now, right, from right now. Because especially if we have that huge catalyst tomorrow, which is the FOMC rate decision and Jerome Powell's news conference, right? If you're still wanting to long something, you need to focus on these selective sectors. All right, these are all the lagging defensive sectors. You want to be looking at them because right now they're doing pretty well while the market starts to kind of show a little bit of a topping price action, looking a little bit toppish. So with all these lagging sectors, I highly recommend you guys to look at these. Okay, and so for example, another defensive name that we were able to look at today was RTX. All right, so if you guys don't remember, I posted this on my Instagram, right? And my Instagram is public, so you guys should be able to see this. It is one of my most recent posts, and I specifically said there's going to be a chance for this one to come back down for a third retest at this macro ascending trend line of support. And that's what we did. We did that exactly today, right after earnings, which came out Tuesday pre-market today, right? So, these are the things that you guys should be, looking at, right? Defensive names like RTX. Okay, so these are the names that won't be too affected by the overall market downturn. But specifically in this individual name, we were able to see a retest at this ascending support trend line thanks to earnings, right? And so if you guys are, really want to look at that post, go take a look at it now, right? And read through very quickly, right? It's not a lot. The caption, it may look like a lot, but it's not a lot. So that's why I highly always recommend you guys to read the caption on any of my Instagram posts. So RTX here, again, great bounce today, great pivot from this pivot point here, right? Because we've had 1, 2, and now a third pivot point from this ascending support trend line. Okay, and also my infamous CVS, right? My favorite, right? This is another defensive name in a defensive sector, right? And this has also been lagging for most of this year, and we just found the bottom around mid to late May to mid June, and we're able to see some great returns overall in equity and leaps on CVS. And I've been hammering this name since early March, right down here. So, CVS, great name to be looking at in the future, right? And new ones that I showed you guys here were PFE, right? PFE, right? Pfizer and Guild. Okay, so these are some amazing names that you guys should be looking at here. All right. Guild and PFE and CVS. There are names that are included in the defensive sectors overall, right? And I gave PFE and Guild on the night of 4th of July. Okay, hey, thank you guys for 6 likes. Awesome, let's get to 10. Let's go. And welcome everyone who's just joining right now. Let's see, you guys are talking here. I wasn't even paying attention. By the way, if you guys think this information is useful, make sure you guys leave a like down below, especially if you guys are watching the recording right now. Or if you guys are listening in right now on the live, make sure you guys hit that like button, or you guys can just show me a thumbs up in the live chat, or maybe even both. That'd be great. So, Fiji, you said hitting the 0.5 fib of gaps has been a game changer for reversal entries. Nice. I'm glad you found a little bit of system there using the Fibonacci numbers there, wick to wick. Or back to baseline cost to get. Nice. Okay, that makes sense. Yeah, I see what you're saying there. Nice. I'm glad that's working out. So again, looking at defensive sectors that I just showed you guys all, right? I just went through every single one of them, all right, that I mainly look at. Okay, I'm pretty sure some people might look at other specific sectors, a little bit more specific ones. But those are my general names I look at. Okay, now let me give you guys a little peek into the international market. So specifically, not just any international market, we're looking at the emerging index fund. So this is taking an overall look at emerging markets, because again, emerging markets have been lagging for a long time, even just this entire year so far. All right, we're past the halfway point of this year too. And so this emerging index fund that tracks the overall emerging markets in the international front, right? Very much lagging. And so EEM looks pretty good right now as it's starting to make higher highs and higher lows. All right, you guys don't see it? Well, here we go. All right. Higher lows, okay? And then we're now making higher highs here, and today was a higher high as well. Okay. All right. So, international markets, right? The reason why we're looking at this is that, well, okay, we got some data from research that money inflows new money, right? So specifically Generation X, oh, excuse me, Generation Z, excuse me, not X, or that, I believe that's a new name for Twitter now, X, which is pretty interesting. I'll talk more about that later, but Gen Z, right? It seems like they're starting to pour in money into international stocks, right? So companies that are not focused on the US, right, or based in the US. And so if that catches some sort of a trend, right, we should be looking at EEM or emerging index fund. Now, specifically, okay, we decide to look at China. Specifically China, okay? And China has been a huge laggard, specifically the big tech names that are headquarters, that have headquarters in China, right? Or they're basically just Chinese companies. And Alibaba, which is an infamous big tech company, is the biggest e-commerce company in China, I believe. And we were able to catch a huge reversal yesterday. Personally, for me, I got 110% plus return on just one single day trade yesterday. And we caught that really early on. If you guys have been paying attention to my stories, you guys know when we got in, okay? We got in on this specific candlestick. I believe it was right underneath 92, okay? And I believe some members got in just slightly over 92, okay? And we caught this entire move. Well, specifically, I got on this candlestick at the high here, but obviously, in hindsight, I could have held a little longer, but again, what a great move, right? What a great move. 110% in one single day, and after what? Like an hour or less than an hour? Pretty good gains. And so now I'm still in BABA. I've actually entered into a new position today, and I told my members, right? And in the weekly time frame, things are looking pretty interesting, right? We're starting to make higher highs and higher lows on the weekly time frame. This is good. And there are a plethora of other Chinese names that you guys should be looking at because of the fact that they are international companies, right? We're not focusing on US-based companies. And so I expect international names, okay, such as specifically BABA, which is in a broader perspective, a Chinese stock, right? Just like JD, for example, another name, or IQ, right? Ichiyi, okay, that's the company, it's the Netflix of China, okay, or PDD, right? Or YY, right? These are all very strong names right now, and they have a lot of room to move to the upside, okay? And so these are names that you guys should be looking at. So, again, why should you guys be focusing on these names or these sectors or these, I guess, specific international stocks? Because when we have the summer seasonality hitting, especially for the months of July, August, and September, and again, those 3 months, I've said this last week in Thursdays and Tuesdays lives, okay? Those are the worst performing months, okay? Again, July, August, September, those are the worst performing months. That should say something, right? That's a seasonality trend. And so what should that mean? What should immediately click inside your guys' head when I say that? Okay, well, you should be questioning what has been leading then, right? What has been the current leading sector, leading market? What has been leading? Because if July, August, and September are the worst performing months, then you're going to expect to see the leading sectors, markets pull back, right? And if they pull back, well, during a bull market, individual sectors can be in a bull market by themselves, right? Even if the overall market, right? Even if the overall market is pulling back, individual sectors can act like they're still in the bull market, right? And I'm not just saying, I'm not saying that the overall market is going to be in the bear market, right? But if the bull market decides to pull back, we're going to see individual sectors seeing some strength, specifically the defensive sectors. So that is the reason why we need to be focusing on those defensive sectors plus international markets or international stocks, right? And they have been proving to be, a pretty good thesis so far. Just that statement alone, as we've been getting some great plays off of defensive sectors, right? Or defensive names, individual defensive names, or international names like BABA. And so I truly believe that we're going to be seeing that for the next 2 months, 1.5 to 2 months, right? And by the end of September, okay, I already have a game plan that I presented to my private members. And so if you guys want to know what that is, make sure you guys DM me at ChartsFocus1. DM me with your name, say hello, and I will respond back to you as soon as possible. Okay. Joel, that's a great question. Is it wrong to trade the leading sectors down, like tech? Or does looking at China stocks give you better returns? Well, here's the thing. Okay, so your question is a great question. Now, I'm not saying that China's going to give you better returns than, maybe even finding a relatively strong tech name and longing that, even if the entire tech sector is going down, because who knows? That lagging tech name might have a lot of money come into it because of the fact that it's been lagging the entire time when the entire sector has been moving to the upside. That can happen. I will probably find one, and I do have one. I included it in this week's newsletter. So for all my members who are in this live right now or watching the recording, you guys should know which stock that I'm talking about. There's an individual tech stock name that has been lagging for the entire year since last year. Okay, it's been actually basing since last year, and it's avoided any type of large downturn or a large move to the upside. Right, so it's basically ignored every single large market movement since last year. And so, you guys should understand, all right, especially for the members who are watching, what name that I'm talking about. Okay. So Joel, Fiji, you said depends on your volatility preference and account size, in my opinion. Yes, that's really, really true. Okay, so you can, no, Joel, that's the wrong one. Wrong one. But let's not say it in here, guys. For all my private members, let's not say it in here. That's reserved for you guys. Okay, so I don't think the public members will, or any of my public subscribers here on YouTube will ever figure it out. But I will keep that reserved for you private members. So INTC, so Joel, that's not the one, but you know what it is. Okay, now Fiji, that's entirely true. Okay, so Joel, that should give you a pretty good answer there. So you can short the entire tech sector if it decides to come down, right? Especially if we have hawkish statements coming out from the Federal Reserve tomorrow. Does that make sense? Okay. So everyone who's just joining in now, welcome, welcome. Okay. So make sure you guys are always watching the recording if you guys came in late. All right, because I always start off every single live stream with very important stuff to say, very important information. Okay, so make sure you guys are giving me a thumbs up here if everything that I've said so far made sense. Hey, I see you guys' emojis there on the right. Thank you guys, thank you. Ooh, 7 likes. Ooh, can we get to 10 likes? All right, so, hey, welcome guys. Welcome, I see more people joining in. Hello, hello. So again, we need to be watching international stocks or the international markets, excuse me, or I guess, defensive sectors, right? Defensive sectors. Okay, I gave you guys my full explanation why. All right, so it's a very quick summary. I've provided an even a lot more detailed explanation as to why we need to be focusing on those things. Okay, to my private members. So if you guys want to gain access to that type of information, where I give out a multi-page review and also my research on why we need to be focusing on the defensive sectors and international markets, let me know. DM me at chartsfocus1 on Instagram. Okay, just let me know what's up, say hello, let me know what your name is, and I will reply back to you as soon as possible. All right. So, with that in mind, all right, we had amazing trades on BABA, amazing trades on RTX. My members had some great trades today on RTX. Okay, you guys should slowly start to, shift your focus from the leading tech sector names that are based in the US, or in the US equity market, and start to focus a little bit more on the different individual defensive sectors and individual international stocks, or just the broader, international markets like EEM, emerging markets. All right. So for the people who just joined in, right, that's kind of my very, very quick and brief and succinct summary on what I told everyone when the live stream started. All right. So with that in mind, we had very, very big earnings tonight. We had Microsoft and Google. So Microsoft, okay, I believe something went wrong with our guidance during the conference call. So we had a little dip after hours. All right, so I believe something with guidance. Cloud demand cools. Right, so that is something that I believe has one of the major factors as to why Microsoft fell today and failed to impress investors. There we go. Yeah, combined. Fell and failed together. So Microsoft again. I think, to be honest, I think Microsoft is kind of undermining the entire AI revolution. So I think they can really start to increase their outlook a little bit more, and the potential that they could have using AI. But you know what, that's just my opinion. But overall, Microsoft, there were great earnings, right? There were great earnings. They beat both on earnings and revenue as well, but not by too much though. No, actually, this is a lot. Never mind. I believe they beat on top line revenue as well, top line and bottom line. Let me see. Yeah, I believe so. Yeah. Microsoft is so OP, overpowered. Low-key just an extension of the US government and tech research. Yeah, literally. Yeah, they have a lot of lobbying power too, I believe, if I'm not mistaken. Or maybe that's a different company. I don't know, I read that somewhere. There's a tech company. Well, I think virtually every big tech company has some large amounts of money and has a huge influence in the US Congress. But yeah, so Microsoft and then Google. Okay, Google had a great reaction today. It almost reached this huge weekly level at 133. Right, this 133 level is a key level for it to reach, especially if tomorrow we open up around 130, 131. We might shoot straight up to 133 and then come back down. Okay, there's still that possibility, right? We can have a nice opening range breakout to the upside and hit 133, which is a major level that we need to come back to. Okay, and we've been really just gunning for that level ever since we started to consolidate like this for what, almost 4 months. Okay, and so hopefully we can see a retest on 133 by tomorrow. But so far, after hours, great reaction to the upside. We nearly hit 10% after hours, but obviously we ended up a little lower than that as the earnings conference started. Just like with Microsoft was hanging around, maybe like, it was like 2 points down from close, or it was around like, what, 348? And then obviously when the earnings call conference started, and they talked about kind of their outlook on cloud, right? Cloud demand is weaning and stuff like that. That ultimately dropped the price after hours. Okay. So again, we have a lot of earnings this week, and we have a huge catalyst tomorrow. So if you guys aren't even trading, or if you guys aren't even looking at the markets, I don't blame you. It's a good idea to not try to do as much, but you know, something to think about for the rest of the week, right? And obviously, I'll talk more about it come Thursday. All right, so that's it on what I wanted to talk to you guys about. So again, focus on defensive sectors and international markets or individual international names. Right, I said it pretty slowly for you guys. I broke it down into syllables. So you guys shouldn't be able to misunderstand me. But again, the reason why we need to be focusing on those specific areas is that, well, summer seasonality trends, right? That should be enough, right? That's all I need to say. Summer seasonality trends, right? And July, August, September are the worst performing months, which means there's most likely going to be a huge pullback coming in the next couple of months, right? From August to September. And again, SPY has, I believe, a gap to fill, right? I haven't said it right here. It has 2 gaps to fill, actually. It has one right here and one right here. I wouldn't be surprised if by the end of this week, we end up somewhere around 448 or even 444. Because again, volatility is going to be reintroduced into the market. All right, we're probably going to see a pop in VIX tomorrow as well. Okay, so VIX has been plunging down. They've been absolutely slapping VIX every single time it tries to pop up. So with a huge catalyst like tomorrow, if we see VIX breaking to the upside, I am most definitely going to be looking at SQQQ, the Ultra Pro short Qs. All right, so this is just the just think of it as an inverted Qs. All right, that's not really it, but just to get a good idea, a general idea of how this works, for anyone who's never heard about SQQQ, just think of it as an inverted QQQ. Or if you guys obviously understand what shorting means, then you know, short QQQ, right? Even the ticker says it, SQQQ. So again, you know, this one, I'm definitely going to look at this one. We've had a pretty good swing on SQQQ. Last week, I literally sniped this at the low of the day, last Wednesday. And we rode it all the way up over to like 17.25-ish. And I took personally profits there, but this one ran all the way up to $18. All right, so if this one decides to pop up tomorrow, especially because the Qs start to pull back, then this one should provide us with another great entry point tomorrow. But again, I am not going to be looking at this until Jerome Powell or when the rate decision is out. Does that make sense, guys? Volatility is my drug of choice. Nice. IV is my drug of choice. Implied volatility. But yeah, SQQQ guys, definitely watch out for this one. Okay, there is a long ways for this one to move up higher. The weekly is extremely oversold, but when we're looking at these types of names, I try not to look at the RSI. There's no point. These are, inverted names from whatever that's inverting, which is QQQ here. I tend to not look at the RSI. Excuse me. There really is no need. Okay. But yeah. So SQQQ most likely take an early entry or just a confirmation entry over $18.20 for this one. All right, so something to be looking at as well, especially tomorrow. There's an immediate name that you guys should be focusing on tomorrow. All right, just like with VIX. Okay, and if you guys don't like SQQQ, there's also other names, right? UVXY, oops, UVXY, VIXY. Okay, so remember this, guys. Remember this. All right. Okay. All right. So that is it for today. That's all I have to tell you guys tonight. But let's start with any tickers that you guys want me to go over. Any tickers. I know most of you guys probably won't trade tomorrow, but if you guys are day trading or scalping, I mean, obviously you guys will definitely want to trade. Well, definitely want to trade since volatility is up, all right? And that's guaranteed, by the way. Volatility will be up tomorrow, all right? I can bet you money on that. And guess what? I'm also 100% confident that I will win that bet. That volatility will be reintroduced and volatility will be up. Okay? If you guys think otherwise, let me know. Let me know. DM me on Instagram. We can bet some money. we'll bet $5. Because I know I'm going to be right. Does anyone have any tickers that they want me to go over? If not, I will end the live stream for tonight. Wow, 7 likes, guys. 7 likes. Amazing. Thank you, guys. Thank you. Do you not have any names for tonight? Nothing? Okay, well, I think that's it for tonight. Thank you guys so much for watching. And, oh, Fiji. Thank you. Saved by the bell there by Fiji there with his Apple. Oh, yeah, so Apple, there has been talks, all right? There have been many talks on Apple on the fact that it could reach $200 per share. I don't doubt it, right? Because Apple is a very strong company. It just loves to go straight up after a large dip. Right? Apple just tends to go straight up and up and up, right? And that's how it was able to achieve all-time highs so far. And guess what? Apple has been staying near all-time highs. I love the fact that we've never shied away from continuously breaking into all-time highs, because when we tend to break into new all-time highs, the most common and most prevalent reaction is an immediate rejection, and we start to see a huge pullback. But Apple hasn't done that ever since reaching all-time highs somewhere around 181.50. Right? And we've been grinding higher and higher and higher. So for Apple, definitely on the intraday time frames. All right, I'll be watching this on the intraday time frames because again, the overall trend is to the upside, right? Obviously, it's overextended, but you know, if the market decides to pull back tomorrow, well, a leading name like this big tech name, Apple, a huge name with a huge market cap or market capitalization, all right, we need to be looking at this one. So right now, Apple is currently, from what I'm looking at right now, is making a wedge, right? And you guys should know what a wedge is. Right? A wedge is a neutral chart pattern, right? So it can give us a break to the upside or to the downside. But, okay, based on the premise of what I said earlier, and for the people who are just joining in, make sure you guys watch the recording. I always say this on every single one of my live streams, okay? On every single live, I tell you guys to watch the recording, all right? Because I say very, very important stuff and very important information, and most importantly, applicable information at the beginning of my live streams. Okay, so based on what I said earlier, all right, what I said earlier, okay, the market can pull back, which means Apple can pull back as well. So for Apple, if we break below 193 tomorrow, there's a good chance we come back down and we fill in this gap here, okay? And that means there's a possibility for us to come all the way back down to 191, and even maybe, just maybe, if the selling pressure is just right, we can revisit 188.50. Why 188.50? Because there is a small gap that we didn't finish filling in, okay? Now, that seems very, very easy, right? That seems like a very, very easy game plan. Well, it's not, because if we were to go all the way down there on the intraday time frame, we have we have two huge levels of support that can hinder any type of move to the downside. We have a level of support at 192 and another huge level of support at 191. Okay, right over here. Okay, if we aren't able to break below 192 or even 191, there's no chance for us to come all the way back down to around 189 and then be even able to reach 188.50 to try to fill in this tiny gap that we almost filled in on Wednesday or last Wednesday's price action. So for Apple, all right, this one definitely needs to be on your watch list, especially if you guys are looking to day trade this one right after the rate decision is out or once Jerome Powell is done speaking. But again, the moves tend to come during Jerome Powell's speech. Okay, you guys should know that by now. So again, I highly recommend that you guys don't trade tomorrow. Just relax, especially if you guys are looking to actively trade or day trade. But if you guys really want to trade, Apple might definitely be a name that you guys should be focusing on for the entirety of the duration of Jerome Powell's speech and also when the rate decision comes out. Okay? All right, so Fiji, hopefully that was very, very informative. Those are your levels. So again, I need to see a break below 193 for it to be justified as a short. Okay. And you said can't actively trade due to job restrictions, but if I could, I would still be day trading Apple. Yes, sir, I know that. Then you're trading Apple and SPY, and sometimes the Qs here and there. All right, awesome. Hey, you're welcome. I'm glad it was informative. Hopefully it's applicable as well. And so for everyone who has just joined now, make sure you guys go back to the recording. It will be posted. Well, it's default actually. But once the live is done, YouTube is going to post the recording onto my channel, so make sure you guys take a look at that because again, I speak about some very important stuff. Okay, very important statements that will be informative and applicable tomorrow. Okay. All right. So hopefully you guys are able to navigate yourself well tomorrow. But if you guys are willing to just chill and observe, then I highly, highly recommend you guys do that. All right. And with that in mind, thank you guys so much for joining. I'll see you guys on Thursday at the same time at 6 p.m. Pacific Standard Time or 9 p.m. Eastern Standard Time. Now, one more thing. Okay, one last thing here. I may or may not start 15 minutes after 6 p.m. or 9 p.m. depending on your time zones, because it seems like people are a little bit more prepared or more, I guess, ready to join the live once I'm able to kind of give everyone some time after 6 or 9 p.m. All right, so I might just do that again on Thursday, because it looks like today a lot of you guys showed up because of the fact that I was able to start the live just a little bit after, so just 15 minutes after 6 or 9 p.m. Okay. All right. Good luck tomorrow, and I'll see you guys all on Thursday. Thank you guys so much for joining. Have a good night.